Some of the strongest moves in the market actually start from a period where the overall market is pretty weak. This is known often as relative strength, and this relative strength is exactly what we're going to talk about in this video so that you can find and invest in the strongest stocks even during a bear market. Simply put, relative strength is going to be stocks that are showing strength compared to or relative to a benchmark. And for us, we're going to use the S&P 500 or SPY as that benchmark. And the idea is that stocks that are within this index with a higher market cap should kind of be moving hand in hand with SPY. But at any given point in time, there are going to be stocks with relative strength and with relative weakness. We want to find and invest in the stocks that have relative strength because they're not only going to be less susceptible to the downturns in the market, but they're often going to then lead the market higher and outperform the market when the S&P 500 or SPY does start to recover from the dip or from the pullback. So to give you a quick example of this, one of the strongest stocks that we've had in the market over the past couple of years has been LITE. This of course means that most likely this is going to be, a stock that is outperforming the market and has that relative strength. Now, how we can actually find and see this relative strength is by using a very simple study here in Thinkorswim. So I'm going to click on Studies and Edit Studies. We want to go ahead and add the comparison tool onto our chart. And this is going to, by default, have a comparison line for the SPX, which is just the S&P 500. And I'm going to go ahead and just change this to a white line. And once this is added onto the chart, it might look a little bit confusing, but all this is going to be the candlestick chart for the stock that we're looking at, in this example LITE, with a line chart for the S&P 500 in the background. So this allows us to very quickly and easily compare the two charts to see how this stock is performing relative to the general market. And we can see that LITE is a stock that has been in a very clear and strong uptrend. Even as the general market is pulling back and starting to sell off to the downside, LITE is still forming higher highs and higher lows. That is a great sign of relative strength in this stock, and that's why this is one of the strongest stocks in the market and continues to outperform. Now, when it comes to actually finding these stocks that might have some relative strength, we can use a scanner to do this. You can use any scanner of your choice. I'm here again in Thinkorswim because this is free to use, and I know a lot of my viewers use Thinkorswim. We're going to go to the Stock Hacker under the Scan tab, and we're just going to look for stocks that are over $20 per share just to filter out those penny stocks. We want the volume to be at least 500,000 shares to make sure that they are liquid enough, and we want to look for a price change over the past 5 days of at least 3%. If you run this scan while the market is pulling back or maybe having a down day, this is going to allow you to find stocks that are simply trading higher over the past couple of days while the overall market might be trending lower. This is going to help us easily find stocks with relative strength. And if I just start to click through this list of stocks that are now, fitting that criteria, we could see some great examples of what relative strength might look like. For this chart for CRDO, it's not as picture perfect because this is in a little bit of a downtrend along with the market. That being said, it does have some relative strength because we can see as the market is trending lower, making lower lows, lower highs, this is actually able to start forming some support right around this $90 level on the chart. And we have a big sell-off then in the general market. It really starts to kind of accelerate then to the downside. And at that same point in time, we get a small false breakdown here in CRDO that very quickly is able to reclaim. And since then, it's had a really strong recovery over 35–40% to the upside just over the past couple of weeks as the market has started to bounce back. And we can click through and see plenty of examples of this happening time and time again. There's always going to be stocks that are outperforming the market as the market is pulling back or trending to the downside. Another good example here is with NBIS. We can see same thing, the market is trending lower, forming lower lows and lower highs. At the same time, on the daily chart here for NBIS, we're actually seeing some higher highs and higher lows form. Overall, this is holding up really well as the general market is trending to the downside. And like I mentioned, these stocks that are showing this relative strength in a bearish or weak market are then going to often be the strongest stocks when the market does start to recover. So now we're seeing the market recover, and just in the past couple of weeks, this has had a 50 or 60% run to the upside because it is a stock that has some very clear relative strength in it. One more quick example would be LUNR. This is a stock that was consolidating and holding up really well as the market was pulling back. And now we can see it is, of course, breaking out to the upside now that the market is recovering from that pullback. So the idea, again, is to run a very simple scan to find these stocks that are maybe holding up well or even trending slightly higher during a bearish or weak market. And then we're going to look for a consolidation period to buy into, or maybe a small dip or a small pullback in that stock with relative strength to actually enter into it, because again, it's going to be the most likely to outperform the market when the market does recover. And you're also going to be less susceptible to dealing with those bigger pullbacks when a stock does have relative strength. So anyway, I think this could be a very important lesson for this period of time, especially with what's going on in the market. We're seeing a lot more volatility and a lot more issues with the Iran war. So you just have to be exceptionally careful with the stocks that you are investing in and try to focus more on trading stocks only with some relative strength. Hope you found some value in this video, and if you did, please make sure to give it a like and subscribe to the channel. And if you want to learn more trading strategies and more about how I analyze and view the market, we have our premium training at Master the Market, which can be found using the link down below in the description. You'll be able to learn the exact strategies that I use. You'll also have access to our group chat to chat with me and our team of traders, get access to our day trade and swing trade alerts, our detailed trade plans, and even our live custom scanner streams. So if you're interested in leveling up your trading at an affordable cost, that can be found at the link down below in the description. Thanks again for watching. I hope you enjoyed, and good luck with your trading.